Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about the real estate market because there are some really interesting things happening. And it's really cool because I see headlines just recently because the news headlines are trying to grab your attention. So they're trying to give you something different, right? As house prices are in decline, house sales, the number of homes that are actually closing too, are falling off of an absolute cliff right now. People need to realize that the news media tries to sway you one way. So when they see a little bit of pop in data, and trust me, it's revised down later, you'll see that more and more. Like, oh, home sales jump last month because they're trying to pull out tiny little areas of the country where they did this. They're trying to grab your attention, but the overall market is turning and it's turning fast. And it's very important that you see where we are in that cycle, not only in the home price and home sale cycle, which are totally two different things. One is a lagging indicator, one is a leading indicator to the health or sickness of a real estate market, but also how important it is to know where we are in the Fed interest rate cycle. Are they going to continue to trend higher? Are they going to go lower? Are they going to pause? And then where in those cycles do you start to see home prices be affected, either negatively or positively? Very important. But let's use this today, and this is really important because it's out of the news, and we're going to talk about it. It's entitled U.S. Housing Market in Trouble. Moody's predicts home prices will fall in 2023 and 2024. Now, something very important for you to understand when it comes to Moody's, S&P, and Fitch, these three large major credit rating agencies, they very seldomly predict things, okay? They are lagging indicators, honestly. They like to tell you everything like, when Lehman Brothers is crashing that day, and they're like, dude, I don't think Lehman Brothers is going to survive. They come out and said, we're going to downgrade Lehman Brothers. Well, good job, Moody's. You should have done that ahead of time when the rumors were swirling around about them. But they never tend to really go out on a ledge and predict. Now, what is Moody's right now predicting? House prices will fall in 2023 and in 2024. The only question is at what depth, what levels will they fall? I believe you're going to see massive falls, and that's why there are so many opportunities to come. All right. Also, real quick, to everybody that bought the real estate crash course, I know it's completed and it's done, but I just couldn't stop at 29 videos. I just sent 3 new videos to the editor. So those are going to be coming out in the next 3 weeks or so. And the reason why I did that is because honestly, the real estate market is changing so much and there's so much to it. I want to just keep putting videos out for you and over deliver for you guys. All right. Here we go. The housing market has hit the skids with existing home sales dropping in 12 of the past 13 months and existing home prices peaking last June. Just so you know, there's a super famous money guru out there that told people last June that were calling into their channel saying, you know what, home prices have only dropped once in history for 5 months, and that only happened in a few cities. That is absolutely not true. It's false. But just want you to know, they sold their house around that time too. Why? Why would they sell their house? Interesting. The surge of home prices during the height of the pandemic and jump in mortgage rates since the Federal Reserve began raising rates last March dampened home demand. Well, we already know that. That's old news. Good job. 30-year fixed mortgage rates averaged 6.25%, give or take, in the week ended Thursday, up from 4.67 a year ago, according to Freddie Mac. Existing home prices fell 12% to 363 in February from 413,000 last June. Wait a minute. Hold on. You got money gurus out there that are literally making $1 billion a year that are out there telling you that home prices don't ever fall and that you should have bought last June. And right here, Moody's is stating that existing home prices fell 363,000 from 413. That's crazy. Guys, we're talking on a national level too. This is so much bigger than the 2008 Great Recession and the housing crisis. You're about to see the most amazing opportunities in the housing market you've ever seen before. The only question is, are you going to be ready? Are you going to be prepared? There are things to do right now, easy things to do to get ready for that. And a lot of it is educating yourself. I think that is literally the most important thing that you can do. Don't expect a rebound soon, says analytics from Moody's Investor Services. Likely increases in unemployment and a U.S. recession later this year. I can't believe it. That's what happens when you change the title or the definition of a word, right? Yeah, we're already in recession. This year will additionally pressure sales and prices, they wrote in a report. I'm going to go on record, Moody's, right now and say, congratulations, you did it. You nailed it. The unthinkable. You and the economic ninja, your company, is in agreement. Mind blown. After a surge in U.S. home prices through mid-2022, values have generally trended lower with variations across markets. Moody's sees more price drops. Goes on here. Prices have slumped big time in San Francisco, Seattle, Denver, Las Vegas, Phoenix, San Diego, Portland, and Austin, they note. Now, little break here real quick. Um, the last time a few cities, metropolitan areas, led the charge and dropped significantly, led the declines also during the Great Recession in home prices, okay? Out of those, there were San Francisco, Denver, Las Vegas, and Phoenix, right? New York, places like that. Miami got hit really hard. Now you have newer metropolitan areas like, honestly, Austin, Texas, Boise, Idaho, and others that are leading the charge. San Diego exploded. There's so many more metropolitan areas across the country that have exploded. I mean, Nashville, Tennessee. You may think there's a ton of rich people in Nashville, Tennessee, but you're about to be very surprised because you're about to see how many people look rich and have no money to their name. Even people that I know of that make $2 million a year that have so much debt that they're about to go bankrupt tomorrow. And it is absolutely going to be staggering to you. It's because of the amount of debt they have. I don't care how much money you make per month. I know the banks only care about that because they want to feed you full of so much debt. It's incredible. So where when you pop, they take all your assets. That's the fun part about being a banker, I guess. It's going to be crazy. Now, check out what they say. Moody says, on a national basis, we expect home prices to decline about 4%, both in 2023 and 2024, the analyst said. Now, that's interesting because I think we've already seen a national price decrease of over 4% since June. I could be mistaken, but I'm pretty sure I'm not. Risks vary across different metros. Oh, wait, hold on. I got to add to something there. You know, they're talking about they like to give you rosy things, but it's not going to be rosy. S&P, Moody's, and Fitch are always wrong. So what's crazy is at least they're telling you the truth right now. House prices are going down. But when they say only 4%, they're going to come back and go, oh, well, you know, there's always time or room for revision. And they're going to be wrong. Risk vary across different metro and market segments with declines from peak values of 15% to 25% or more possible in some areas. In addition, they expect new home sales to drop about 20% this year. Now, I'm going to tell you right now that the 15 to 25% in some areas, these massive metropolitan areas that blew up, I believe you're going to see literally drops of between 40 and 80%. I'm not joking. Why? Because I believe the bond market's going to collapse and we're going to have literally mortgages someday in the next couple of years in the teens, if not over 20%. I know that sounds crazy, but that's just the economic ninja. And I could be wrong. I'm not a financial advisor. I'm just a dude with a bro huck and a dream. A dream. I can't tell you about that dream just yet, but it's coming true right now. And one of those dreams, a little dream, is buying up houses for pennies on the dollar and then being good people with it and renting them back to people and showing them how to become wealthy. And when you do that, you in turn will become wealthy. It says right here, only 21% of homes listed for sale last year were affordable for the typical U.S. household, according to real estate brokerage Redfin. Affordable means that the buyer's monthly mortgage is 30% or less of the buyer's income. I go over this in detail in the real estate course. It's very important to know, and I break down the average income of any household in any town, USA, into thirds. And I say why when it bumps that 2/3 level of the average ordinary income of anyone's budget, you know that the housing market's getting frothy. And we're going to start losing. It's going to start to turn. Well, that happened a year and a half ago. All right. Now here's Morningstar's take on Toll Brothers, because it's important because the home builders tell you the future of the housing industry. They are the leading indicator. I'm sorry, they're lagging when they're building. They're leading when the stocks go down. I hope you understand that. If you're looking for housing stocks, you might want to consider Toll Brothers. A luxury home builder. I wonder how much, it even says free report. I wonder how much Toll Brothers had to pay them to put this in the news. You guys, do me a favor and put your best guess to how much Toll Brothers paid Morningstars, because I'll bet you I wouldn't even be surprised if this was paid. But I don't know if that's it or not. A luxury home builder, Morningstar, assigns the company, and I could be wrong. I could be wrong about that. All right, just no moat. Hmm. Morningstar assigns the company no moat. I don't know if that's like linguistics or what is that, and puts a fair value on the stock at $69. It recently traded at $60.30. Wow. So Morningstar thinks that Toll Brothers is going to go up. Put down in the comments what you think about that. Is Toll Brothers stock going up or going down over the next year? I think it's going down. Toll Brother prides itself on controlling an ample supply of some of the best land in the industry, Morningstar analyst Brian Bernard wrote in a commentary. Just so you know, I know somebody that works for Toll Brothers and they're getting panic calls. Please help us figure out how to sell these homes faster. And they're starting to sell these to funds, and it's literally called build to rent. And they're selling the houses they can't sell in blocks of 500 to these hedge funds that are renting them out and getting a rate of return for their investors. But that's about to collapse too, as more and more people can't pay those exorbitant rents. Bernard sees three factors boosting Toll Brothers. Increased demand for entry level homes could encourage established homeowners to sell their first homes in favor of move up homes. All right, so that's real brilliant. Let me ask you this in the comment section. Do you have enough money to move out of your house right now? Right now, your house, sell it, whatever interest rate it is, right? 2, 3, 4, 3, 4, or 5%, right? Do you have enough money to sell your house, take the equity, buy the next door neighbor's house, not moving up like they're saying here? People are going to move up. Just buy the house next door for the same price you sold it. Do you have enough money to do that? Put it down in the comment section below, and everyone read the comments. You're going to learn so much. The popularity of empty nester homes and active adult communities is increasing among baby boomers. What does that even mean? Oh my gosh. Growing how sorry, the sky is blue. I wish they would have put that in there. And Toll Brothers is going to do good because the sky is blue. Growing household wealth should put the company's affordable luxury products in reach of younger household. Growing household wealth. Wow. Morningstar, are you guys dumb? In the comment section, can you let me know how quickly your wealth is growing right now? I mean, as you're buying, hyperinflated eggs, and you're paying higher electricity rates, and I don't know, car prices are still up there. Can you just let me know down in the comment section below how your wealth is growing? Because obviously Morningstar knows something that every single one of you guys don't, and me, obviously, because growing household wealth. See how disconnected the media is? It's absolutely insane. That's why I think it's so important and so vital that everybody start to educate themselves now on how to crush it as these markets collapse and you can buy these houses for a penny on the dollar. And hopefully I'll be buying them from Toll Brothers. It would just be poetic justice. Guys, I hope you have a great day. For everybody about the course, guys, the 3 new lessons are coming out. And if you guys want a discount, I'll throw a 70% discount link in the description below. Hope you guys have a great day. The Economic Ninja is out.